Good afternoon, everyone, and thank you for being here. Today, I will be talking about swing trading into profits. Actually trading 10 minutes per day or even less. Maybe on a trending market, you could actually trade 10 minutes per week. And that is just moving your stops or just setting your alerts or just trailing or just finding new trades and placing entries or stops. Okay, so for those of you that do not know me, I see a lot of very new members in here, a lot of new faces in here. So my name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com, which is a boutique trading firm that is specialized in educating individuals how to day trade, swing trade, and invest in any market. I have been a professional independent trader focused on day trading futures and swing trading stocks and investing for over 25 years. And prior to becoming a professional independent trader, I come with 10 plus years in investment banking. So I have been working the sales field my whole entire life. I have been a very successful trader. I have been one of those traders that cannot say that I blew uh, an X amount of accounts before I got profitable because I understood the power of position sizing, understood the power of management right from the get-go coming from the field. I run two incredibly successful services, one of which we're going to be talking about later on today. And that is the Stock Swing Trader. It is a service that is designed for DIY trading and investing, and it has been running strong since 2010. So basically 15 years. It's definitely has been one of our most successful service, and we have traders from over 135 countries. No kidding. We do run a futures trading room. This is a power income trading room that I have started in 2017 because it wasn't always the case that I was a futures trader. I literally transitioned into futures because of tax purposes, and that happened in 2015. So since 2015, I'm no longer day trading stocks, even though I'm still day trading here and there stocks, but I'm a full-time I'm a full-time day trader when it comes to futures trading. And by full-time, I mean about an hour a day, every single day. I specialize in the power hour. I ran my own hedge fund from 2005 to 2015. I did offer a lot of advice to traders through the 2007, 2008 financial crisis. And I'm very happy to say that I have a bunch of very, very happy members. We do offer trading education, like I said, for swing trading and day trading, and also for investing. We're revamping our investing course. We actually launched Trade Out Loud with an investing course, and we're going to bring it back up, but it's going to be revamped. It's going to be out of this world. It's going to be combining technical with value investing. I do specialize in high velocity trades, and velocity trades are coming from precision points. Precision points are inflection points on the technical chart that show us that there is a confluence level at that point from which, if the price trades above or below, depending on whether long or short, you could have a big power surge. Take a look at BABA. I have posted BABA. And if we have enough time, I could actually show you, because we do have about an hour. So I can show you BABA. Yeah, I'm going to show it to you a little bit later. I posted BABA on the 24th at an inflection point, and it ran like wildfire. So a lot of my followers on my public X feed took the trade, and I received a tons of DMs. So anyways, so let's continue. If you guys want to know more about Trade Out Loud, you could definitely go to my website. It is TradeOutLoud.com. You could also find me on X, on Facebook, and YouTube. So today we're going to talk about how you can get started in DIY trading, 10 minutes or less per day, swing trading, and also active investing, right? Because you want to put your money to work. You want to have your money working for you. We're also going to talk about best trade setups for explosive gains days and weeks before they happen. Yes, it is possible. Just like I've mentioned earlier, the trade in Baba, we actually were stocking it for about 3 days before we saw a possible entry into that stock. Focus timeframes for best results, because not all timeframes are created equal. So there are some secrets that you should know about these timeframes and how they work, and what setups work best with associated with the timeframes. Also going to talk about the trade selection criteria, because it's very important how you select your trades. Because a lot of times you're going to see that, sectors are rotating, or you have some tape bombs in the market, like we had with DeepSeek, and you saw all of the tech stocks, especially the AI stocks, NVIDIA, right? One of them, Broadcom, that took the price lower. I think that is a humongous opportunity for traders here in the US to buy even more. I actually bought with both hands. I'm heavily invested in both stocks, in NVIDIA and in Broadcom, and I just added a whole lot of shares into it because it's a bargain. It is a bargain. You don't really often see pullbacks, not unless you have an earnings season, they miss earnings, or they miss guidance, or they're in line in which the price action may decide to pull back. And even though those are really appealing levels to buy. So when others panic and they sell, you should rub your hands and be very happy, because you're going to get the price, you're going to get the stock at a discounted price. And we're also going to talk about how to spot mega opportunities in the market, even in the worst market conditions. Because let's face it, there was a lot of panic on Monday, right? And on Tuesday into the market. Astute traders know how to profit from these panic modes. All right, so let's get going. I'm going to share today how you can accelerate your way to retirement and DIY cash flow. So if you have a full-time job, this presentation is for you. If you want to transition from day trading to swing trading to investing, to have minimum input into the market, this is for you. When you're on vacation, I just don't take vacation from the stock market. I constantly look at my portfolio. I constantly look at the market, because I want to have my money working for me. And definitely you can work from anywhere in the world as long as you have an internet connection. So self-directed trading and investing is all about taking control of your financial future and making your money work for you. And nobody can do it better than you. Because when you're talking about giving your money away to a fund, or giving it away to a portfolio manager to take care of it, or you even talk to your broker, again, their interest is going to be another account number, commissions, fees, etc. So you can end up by the end of the year paying a lot of commissions. Okay, we're not going to get into investing specifically today, but again, if you have your long-term money, look at your accounts and definitely make your money work for you. I've had it with the fund manager, with a hedge fund, and trust me, I lost, and that was a long time ago, and I'm talking about like 25, 27 years ago. I paid an arm and a leg to get my money back. I lost half of my money into pulling my money back. But when you do it yourself, you don't have to go through that. Okay, so swing trading is actually generating cash flow, even though it's not like day trading when you're in and out within the same day. In swing trading, you have access to your money whenever your stock or your ETS achieves target, or obviously the inverse can happen and you could get stopped out. Income equals wealth, because everything that you make into your day trading account, into your swing trading account, you're always going to contribute to your larger time frame account. You're going to compound into the stocks that you have already been into. For example, like Nvidia, right? Huge mega opportunity to allocate more money into that. Again, no management on that side. So you're becoming a money magnet. You don't have to be a math whiz in order to do this. You don't need to have a finance degree, and you really do not need to know a lot of things about fundamentals. When you're swing trading, the only thing that you will be required to know is when the earnings report for that specific stock that you're in, or the stocks that you intend to trade, are reporting. Because, for example, after the close today, we have some very big announcements from Tesla, for example. And because, let's say, Tesla has a phenomenal, let's say, buy opportunity, or it's setting up a buy setup, just because it has earnings tonight, that's not a good idea. Just look at it after earnings. If you're doing options, that's totally different. So it's very important to know that you do not need to be, again, a math whiz, to have a degree in finance, or to be a CMT in order to start trading or investing. Now, let me get to the most important part of the presentation. Did you guys know that every year stocks are going to move about 20 to 30%, maybe more each year? So that is a huge percentage. Do you guys know what the hedge fund percentage is? Like, if you have your money parked with hedge funds, aside from the commissions and fees that they charge every single month for literally basically almost doing nothing to your account just because it's parked there, you're lucky if you could get 7 to 10%, 10% on a dynamic, extraordinary trending year. But the norm is about 6 to 7%. And I'm here to tell you, and also to prove to you, to show you that every single stock is making a 20 to 30% move into a trading cycle. And again, this cycle repeats throughout the year. And this, again, happens sometimes more than a couple of times a year. Okay, so let's take this example right here. And this is a chart of the Qs. Look at the trading cycles: pullback, rotation from low to high, cycle number 1. Pullback, rotation, cycle number 2. Pullback, rotation, cycle number 3. Take a look, for example, at the S&P. And this example is from January of last year into December of last year. Take a look at this very strong movement to the upside. Minimum management here. If you are trading into a swing, if you're, for example, not an active swing would mean like you're getting this rotation here, and at the first sign of a pullback, you're out. And then you're looking for the next buy opportunity. You're seeing the rotation here, so you're entering here. First sign of reversal, you're out, right? You're looking, you're waiting for the pullback to be done. You're waiting for the rotation, and then here you go again. So definitely here you have another 3 cycles, but there are different ways in which you can manage this. You can manage it, for example, like I just showed you, or you can just buy and hold, okay? And you can see here from the swing low here to the swing high, you have 30%, right? So from January to December, you have 30%, and that is in the SPYs. Now I'm going to go back a slide, and I'm going to show you the cycles here. The cycle 1 that we talked about and I shared is from the swing low to swing high here, and it's not even, it's at the rotation point, at your exit point. That's 26%. The next cycle is about 20%, and the following cycle is about 24%. So even if you would have, let's say, 20% on each cycle, you would have 60% on a year. And that is in comparison to the hedge funds and what they deliver. All right, so for example, I'm going to show you just, very few trades that we have taken from the beginning of the year. And I've noticed some divergency that was happening into the market. The market definitely had a very hard time moving forward, especially after the dovish FOMC meeting that we had last month on the 16th. And by the way, FOMC meeting is just around the corner. In about 45 minutes, I have my I have my screen on CNBC here to see, yeah, to see what's going on in the market, because I have all my investments are in the market. But I started navigating away from, let's say, quote unquote, the market stocks, and I started looking at, some unique names. And this is actually something that I do, especially when we don't have a trending market, where you don't have the big mega power players like Nvidia, Amazon, Broadcom. If you're seeing that they're a little bit sluggish, but they're still holding, it means that there is still not a sector rotation. So you still focus on them. But outside of that, you're going to be scanning for relative strength and relative weakness. I actually use a lot of services for my scanning. I use 3 scanners already. And I'm focusing on unique stocks, and I do have certain parameters that I look for. This was one of them. So WHR, this is Whirlpool, and I posted it to my members in here on January 14th. And I mean, if you look at it now, it's just gorgeous, right? Past over the $130, $130 is where we're trailing it. So this is a shorter term swing, meaning it's from a swing low to a swing high. The first sign of reversal, you're exiting. So for example, into the beginning of the year, it was the first newsletter that we sent out with the first video. We talked about FNMA. This is, again, the Federal National Mortgage Association. So you guys know that it was in the news a lot. And on this stock alone, our members were able to capitalize 63%. So how is that, right? How is that in comparison to just trading Apple or Nvidia or Amazon, right? This is phenomenal because you're focusing on unique opportunities into the market. You can see here the gap up and the move. And by the way, it has pulled back. So if you're a long time holder, or even if you're a swing trader, you can look to either add or buy more of FNMA. And it's a really good price point. It's at a $4 to $5 price range. So it's really, really affordable for any account size. So money managers and hedge funds live mostly off commissions and fees. And I was one of them because I did run a rough fund for over 10 years, and I did charge fees. And I did charge commissions, but I'm telling you guys, it's a lot of work, and I would rather focus on my own money, because you're just an account number to them, okay? Whether the stock or fund is performing or not, you get paid. So for example, if the market is in a pullback, if I have clients right now in my fund, for example, so if, let's say, the market is pulling back, they're losing money, right? But at the same time, I'm still charging commissions at the end of the month. So depending on, it doesn't matter what the market does, you're charging those commissions. Obviously that we would hedge in certain, obviously when you're getting the pullbacks, we're going into inverse ETFs. So we did have strategies for hedging, so the clients would not be down. And that's one of the unique things that we did for our members. So did you guys know that Barclay Hedge reported that over the past 5 years, the average hedge fund in its universe produced an annualized gain of 7.2%, with a Sharpe ratio of 0.86% and market correlation of 0.9%. This is really bad. And I want to show you this chart again. Okay, take a look at this chart, because I'm telling you, nobody can manage your money better than you. Now, new reports find almost 80% of the active fund managers are falling behind the major indices. It happened last year, and it's happening this year because we're right now towards the end of January. Again, there's a lot of balancing that is happening. That's why you're seeing the shake and bake into the market. Let's look at some more charts. This is Costco. I love trading Costco. Costco, every single time I'm a Costco shopper. So again, when you decide to trade something and when you decide to invest in something, I think the first thing that, if you're having a hard time identifying trades that you want to be in, or long-term or medium term, just look no further than your statement and see where you're shopping, what your shopping habits are, and where your money goes. So a portion of my money goes to Costco. We shop at Costco, and every single time we go to Costco, it is literally packed. It's like literally a zoo. So Costco is one of the stocks that is constantly on my swing trading watch list, and it's constantly on my investing to add list. Also, Meta is going to have a really phenomenal year based on prior earnings, based on estimates, and based on the technical chatter. So it's fundamentally sound. It is also a stock that is technically very, very sound. And you could see the performance. And I have another updated chart of Meta for you. We actually initiated 2 trades in Meta this year. Swing trading is the most effortless trading style. It obviously needs a little bit of research and scanning into the end of the week. But once you're done the scanning and once you start placing some alerts and you start looking at some charts, everything is, other than that, a walk in the park. You do not, but here's the thing. You don't, like I said, you don't need to be a math whiz. You don't need to have a finance degree, but you need to know and respect the rules of the game. And you need to be very patient and wait for the setup. I find that a lot of times traders come to me saying, hey, I just bought this, and this is for a swing trade. Investing is totally different. You could buy it now, because you could work the trade out by compounding. However, in swing trading, you can do that if you have a really big account and you start with a small lot. But when you're swing trading and when you're allocating, let's say, your risk level, and you don't have a really good entry for that, that is a trigger point for that, and if you're getting it in the middle of nowhere, then good luck to you, because you need to have really precise parameters to have a really successful swing trading career. So it's not about the trade as much, but it's about the risk and the management. So why is it important to get started? Because the money that is sitting right now in our bank accounts are losing money every single day due to inflation. I mean, seriously, everything is just crazy, right? You guys know, I don't need to tell you. So who's swing trading for? And who is, the ideal person that needs to get involved in swing trading? First of all, if you're, busy with your lifestyle, and you want to manage your own money, and this is for you. Okay. Part-time traders that do not want to sit in front of the computers all day, this is for you. For example, I'm a full-time futures trader, stock trader, income trader for Power Hour. But look, I don't want to do this forever, right? I don't want to get up at 7 o'clock every single day, or maybe I want to go for a swim at 9 o'clock or 10 o'clock. So I don't want to do this my whole life. So I'm going to focus more and more on my swing trading, because this is where I want to have my money working for me. I want to do the minimum effort for my lifestyle and literally live my life. So swing trading is a wealth generation style of trading as well, but it's also generating income. And it's also going to, put you on the path for additional wealth, because you're going, with the extra cash that you have. Obviously, you're going to be paying your bills. You're going to be, paying everything else, your mortgages, whatever. And what you have left, always put into your investing account, at least 20%. So all you need is an average of about 10 minutes a day. You can, if you use the service like ours, this is the minimum you can do. Sometimes, you don't need to trail anything. Like, for example, today or yesterday, literally 0 minutes in the market. It was just a couple of minutes on Monday to adjust some stops and take some profits. But other than that, you don't need a lot to be swing trading. You can work from home. Actually, you can, trade from your phone, literally. And I'm not one of those people that say, hey, you shouldn't be trading from your phone, because day trading is not about trading from your phone. But swing trading is totally different, and investing, you could definitely do that. But when you're doing your analysis, just go back to your computer, your laptop, your desktop, whatever, do your analysis and find the trades that you want to be in. So this is how you make your money work for you. So whether you're a really busy individual, whether you're a doctor, whether you're a lawyer, in fact, these the doctors and lawyers are most of our customers are doctor and lawyers, most of our members. But definitely, if you're a very busy individual and you don't have time to manage your own account, swing trading is for you. And if you want to manage, I'm sorry, if you want to manage your long-term money, swing trading is for you, and definitely investing. So how do you get started? Okay. A lot of you guys in here are already typing in the room and are very interested in knowing, how do I do it? How do I start? Well, first of all, it starts with opening an account. You either go with Charles Schwab, you go with Fidelity, TradeStation, Interactive Brokers, Robinhood, Webull, you decide which one. I have all my accounts with Charles Schwab. I have multiple accounts. And when it comes to swing trading, I have two swing trading accounts and 3 investing accounts, long-term investing accounts. The next thing that you need to do is to determine your risk and your risk tolerance. Now, remember, we talked about risk, that you don't need to be a phenomenal trader as long as you know how to manage risk and position size. You're gonna come ahead even if 60% of your trades are losing trades. So the norm says anywhere between 1% and 3%. So I selected 2%. I trade, and if we're talking about myself, and if you want to know exactly what I do, I use between 3% and 4% because I've been trading for a really long time and I do have a lot of experience in the market. But again, it's also based on your risk tolerance, because if you think that 2% of your account size is too much, especially when you're having a market that is turning around and you have to throw those bad apples, and you're going to have some losses. And if you think that, hey, I stopped out of 5 trades and those 5 trades are 2%, right? Then you're like, oops, I cannot stomach that. That's too much of my account, right? So if 10%, let's say, is too much, and if you feel like overwhelmed, for example, you could go down in size to 1%, because you don't know when those tape bumps are coming. You don't know what's ahead of the market. Your job as a trader is to identify the best possible trade scenario, technical setup, because technical trumps everything else, fundamental. Because how many times have you seen trades, for example, that stocks that have reported earnings, like FedEx or UPS or Apple or Amazon, that had poor earning guidance, that missed earnings, that they gapped down? And how many times have those stocks rebound in the next few days? Many, especially those really solid fundamental ones. Step number 3 is to establish your game plan. Here, you need to have some trading skills, because you need to know what an entry is, where to place your stop, where to select your target based on what the technicals are telling you. And why the technicals is because 90% almost of the money that is into the market right now is literally high frequency trading computers. And it's very heavily relying on technicals rather than fundamentals. Obviously, the fundamental component is going to give you an edge, but you need to have a trading plan. Of course, you need to have some trading education in order to find these trades, in order to know how to identify the entries, identify the stops, identify the targets, know how to trail, and definitely position size. The step number 4, so the next step would be to create a trading universe and be very diversified. Here, for example, I'm showing you, this is from today, and these are the Magnificent 7. Now, I'm going to ask you guys, is there such thing as a Magnificent 7? Because these stocks have not really been performing that well, except for Meta. Google is trying to press into the highs and is trying to break a multi-month base on the daily. Apple just had some bad news from China a couple of weeks ago, and now it's rebounding. But all in all, you should be diversified and build your own trading universe and have a little bit of everything. Have some tech stocks, have some utilities, have some financials. So be very well diversified. You don't have to, but it's really a good idea to be diversified. I have diversified. I'm going to share with you my list in a second. All right. And step number 5 is to create the strategy. What do you want to do? And this is going to be your trading plan that should be fit on a little post-it. Literally, it's not going to be a novel. So in your trading plan, when you're creating your strategy, you should identify the stocks because you have your trading universe, and you should follow certain steps. Number one, you should always be, and especially if you're very new to trading, you should definitely be a trend follower. So a trend is very easy to read. There are tons of free websites out there that are going to give you a lot of details about trends, about what's running, what's lagging, like finviz.com. That is literally one of the biggest free tools that you have on the internet. It is a scanner. You can scan off of that. You can build sectors over that, so you can watch all the sector rotations. And the best part is free. So I'm telling you guys, do a little bit of study. Don't waste your money. If you have money to give, put it into the market, okay? And buy stock with it. So the first thing is to identify a trend. The trend is very easy to identify because when you're looking, and by the way, because we're talking about swing trading, in swing trading, you are going to look at two charts that I'm going to share a little bit later on. You're going to be looking at the daily chart, and you're going to be looking at the weekly chart. You could also do counter trends, but they're a little bit tricky because the risk to reward ratio may be a little bit asymmetric, but you could still get those squeezes out. And of course, last thing, what stock to trade? Again, look at the sectors. And again, it's finviz.com, RAW. It's finviz.com. And you can find a lot of trading ideas there for free. So if you're a very astute trader, I'm glad you got it. Okay. You can, it is amazing. Okay. So I don't know if I have time today, but I can show you, I don't know if I have time today, but you could actually create lists of sectors that are going to show you what's moving within that week. So this is one of the ways I found out this week that there is something cooking in the restaurant sector. And if you go to my public X feed, yesterday I posted a list of probably 6 or 7 stocks that are running. Okay, so like Cake, Cheesecake Factory, these stocks are going undetected. Why? Because everybody's worried about AI, everybody's worried about NVIDIA, and these stocks are just quietly, kind of like going up, 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 up. Anyways, so swing trading 101, let's get into the nitty gritty. Swing trading is the sweet spot between day trading and position trading and investing. It generates high probability trades and it offers the best chances of success, the best return on your investment. So swing trading positions will be held from 2 days to a couple of weeks. And again, it depends on how the market is performing. Because if you have a stale market and if you have a stock that is in sync with the market, so for example, you're looking at the Qs and you're looking at Apple, you're looking at the Qs, you're looking at NVIDIA, and they're stalling, right? They're not stronger or weaker than the Qs. As long as the Qs are going to remain range bound, those stocks are going to remain range bound, right? So if the range is going to continue for 2 months, then you're going to be stuck in the trades for 2 months, right? So that's one of the reasons why I look for relative strength and relative stocks, because I could always have a stock that is working for me, right? Focus time frames, daily and weekly. Position size, that means long-term, that means investing. It's not necessarily generational wealth because I'm not Warren Buffett. I'm not buying a stock now and I'm going to buy Coca-Cola now and I'm gonna leave it, to my nephews or kids or whatever. No, I want instant gratification for myself. All right. Everybody's for themselves, right? So you want instant gratification, but that instant gratification is not that instant because you sometimes have to wait a couple of months or 3 months or 6 months or even a few years. For example, I showed you that stock of FNMA, right? My time horizon for that stock is going to be 2 to 3 years. So it focuses on higher time frames. Investing focuses on higher time frames. It focuses on the monthly, the quarterly, and the annual because you're going to be holding the stock for a relatively longer period of time. Now, swing trading is not about capturing bottoms or tops. No, you can't. It is very literally impossible to get the very low and sell at the very high. But the swing trading is about finding the best possible entry opportunity and capitalizing on the momentum up move or even on the momentum down move, because you could actually short as well. So swing trading is this simple strategy where you enter the trade when the price breaks, rotates from support or, from a certain setup, and you sell it at the next reversal point. So it's basically the core. This is what you're going to focus on. So the elements of the trade are going to be the entry, the stop, obviously position sizing, right? Share sizing is very important depending on your account size, whether you're going to use 1% or 2% or 3%. And at the first sign of reversal, you're going to be exiting the trade. Let me show you one example. So here you can see that we have a really huge baseline, right? So we had a high, we have another high, we have another high. So at some point you're looking for a breakout, right? So this is another stock that we have been into. This is a really good stock, the Williams Company. So this is the entry point above the base. This is the stop below the lowest point of the base, and here is the outcome. Again, as you're going into earnings, you have the option of, let's say, you know what, I'm going to take my money and run, and I'm going to revisit it after the earnings, or you could stay in. The one thing that I want to draw attention to is that you have to have the risk tolerance for that, meaning your personal risk tolerance, because you should not be placing stops. I pull out all my stops. If I want to hold a stock through earnings, for example, like Tesla, I'm going to be holding Tesla through earnings today because I have been in Tesla since the first week of January, and I don't intend on selling it, because even if it pulls back, I want to add more to it. And I'm adding, basically, I've been in it for almost 3 weeks now. All right, so how to select the winning stocks, right? Okay, so first of all, it takes a proven strategy to select the highest trades, swing trades, ETF stocks to trade or to invest. The stock needs to be fundamentally sound for long, medium, and medium term, right? So you're looking at the chart, you're looking at either the daily chart and the weekly chart, or both. Obviously, I analyze all time frames before I get in anything. Because I don't want to be in divergence with the time frame. Because if I have a sell setup that is developing onto a monthly chart, I don't want to be buying it on the daily, because the force of the monthly or the weekly is going to be greater than the force of the daily. Fundamentals have to be in line with technicals. Like I said, you don't need to be a rocket science in order to read fundamentals. Just know when the earnings are at and do a little bit of earnings analysis, meaning looking at the chart to see the past behavior, past price action behavior into earnings. That's it. So the chart is going to tell you exactly what you need to do. You got to buy stocks on sale. So it's going to take the risk out from swing trading and also from investing. But when to buy? There are a lot of events that are happening in the market. Do you have to wait for those events? Not necessarily. You could still find good setups based upon what the market and how the market behavior is. But definitely one of the biggest opportunities is when you're having panic into the market. For example, the dot-com bubble. These are tremendous investing buying opportunities. The 2008 financial crisis, the 2016 election, the 2020 pandemic. These were fantastic trading opportunities. And the next big time is right now in 2025. Now, do I need these events, really catastrophic events, to get in, like pretty much, crazy events? Yes or no, but you need some kind of a catalyst. For example, the pullback that we had in with the AI is a really great opportunity. Okay, so that is a really great opportunity for Broadcom, for NVIDIA. So I have added again more shares to my long-term trades. Focus on companies that have thrived and survived over the years. So if you see that there is a trade that is trending down and you want to buy it just don't be stubborn and say, hey, I think it has reached a low. I don't think it's going to go any lower. There's a reason why it's that low. And especially know not to short anything that is very weak, especially into the end of the year. Never do that. Because you are in conflict with window dressing and with the January effect. Be diversified, like I said earlier, and always stay away from high risk industries like airlines, hotels, biotechs, unless you swing trade. It's fine if you swing trade them, but remember, there are risks even when you swing trade these stocks. All right, here is an example of a monthly chart in the Williams Company. And by the way, this right here is a gem, is an opportunity, it's a massive opportunity. If you look at the chart of the diamonds in the Dow, and onto the monthly chart, you will see a similar setup right here, which is going to be concludes with a very potential, very bullish February. Also be in sync with the institutional footprints, and follow the cycles, follow the trading cycles. Institutional buying, selling creates the follow through. So this is why we need to be in sync with them. Institutional buying, selling occurs during really strong currents. Those are the trends on technical pullbacks and areas of accumulation. And the buy zones provide clear buyable points. So wait for a rotation. Don't just buy it on support. Don't be that trader that buys on support, because that is the craziest thing ever. Never buy on support. You have to buy on a technical setup on support. So what the books are not telling you, and hedge funds know this and they keep it to themselves. And I come from that field, and I'm telling you, don't buy on support just because it hit, let's say, the 50 SMA or it hit prior support. Don't just buy it there, because support is just the last safety net before a crash. Okay, so you need to have the confirmation that that area is going to hold. So look for a technical buy setup there. Now, types of stocks, we're not going to go very deep into every single type of stock, but I would say growth stocks are amazing. If you don't know what growth stocks are, these are the Amazon, the Meta, Tesla, Google, Nvidia. For example, value stocks, these are the Johnson & Johnson, Procter & Gamble, XOM type of stocks. Income stocks right here, these are the AT&T. These are stocks that pay a really good dividend. You have Verizon, you have Pfizer. Again, CVX is into an income stock. You have blue chip stocks like Apple, Microsoft, Walmart. These are really good for swing trading. I like growth stocks. I like blue chip stocks. I sometimes like value stocks as well. Not crazy about them, but I do. Then you have the penny stocks, right? Penny stocks are a little bit more difficult. I don't have trades in penny stocks as the volatility is really crazy in these types of stocks. So I try to go more into the growth stocks, more into the blue chip stocks that I focus on. And of course, some trades that are on their own. So when it comes to trading, no one has a crystal ball. It's just 99% technical and 1% fundamental. And I share with you what the fundamental side is. So Tesla is going to be reporting today. How exciting. What do you guys think Tesla is going to be doing today? Let's talk a little bit about Tesla. What do you guys going to think? What do you think? Up or down? Up or down, guys? This is the support right here. Okay, the stock definitely has been downtrending. Okay, so here's my thought on it. If the price is going to take out the 407, it's going to go fight. Yes, Amar. I think it's going to go higher if it takes out the 407. But if it doesn't take out the 407, I think it's going to get rejected again and probably send back below the 374. All right. So yeah, it's a tough call. Again, it's literally a guessing game. It's more of a casino type of, lottery type of trade. So let me share with you a little bit about the Trade Out Loud strategy criteria. And oops. Okay. So let's talk about the criteria. First of all, you need a good history of earnings, right? Like I said, 3 years minimum, or at least, 3 quarters back if you're doing swing trading. You have to have at least 3 prior quarterly earnings beat expectations. And what do I mean by that? So it could be actually really simple, because when you're looking at into a stock like Tesla, right? I'm going to go here to the monthly chart, so I'm compressing a little bit more time frame. And okay, so this is the new earnings cycle that is going to come out tonight, right? And you look at the past earnings cycle and see what the price action did. So actually here, the past earnings cycle, right? These vertical lines represent the earnings. And you can see the price action went up. When I go to the next one here, I see that the price action was down, but actually created a higher low in comparison to the bottom here, right? So the stock was relatively struggling for, quite a few quarters. If you look back here, so a couple of years was struggling. This was rejection. This was a rejection from resistance, and then it came back down. So this would be the time to shine here. So you basically only have like 1 quarter that has been good within the last couple of years. So this is, this is how you look at it. Sorry about that. And then, for example, you look at a stock like Apple, right, which is going to report tomorrow. When you look at Apple, you can see it's going to report tomorrow. Tomorrow, we're going to see if it prints a green or a red. Let's go to the daily here. If it's going to print a green or a red, but definitely here you can see that the last earnings cycle, it pulled back, but it found support. So again, it wasn't a spectacular earning result for Apple. But again, it pulled back ever so slightly back into support, and it found, look at the cycle here, guys. I mean, this is tremendous. And we traded this last year in November. Take a look, 16% gain in this cycle. So this rotation here was textbook. Why? Because it came off of those really amazing support plus the rising 10x the 200 simple moving average. All right. So when you look at charts, make sure that you simplify everything. So it's not rocket science, guys. Look for companies that make a splash, that have either a new product or service or launch or something like Netflix, right? That reported earnings. Look at the technical chart. Look at the trend. If it has higher highs and higher lows, guys, it's trending. You don't need an algorithm to tell you, or you don't need a service that is going to tell you, oh, this is uptrending or this is downtrend. You could actually look at the chart and see higher highs and higher lows. It's that easy. And it takes you literally a nanosecond to identify that. Look for volatility contraction, position within sector and index. Again, we talked about today about leaders and laggers, about relative strength and relative weakness. Pay very close attention to this, because when you're having a bland market, but if you're having, for example, one stock that is strong, let's say like Walmart is ignoring everything else, then you're going to capitalize on Walmart. You're going to focus on entries in Walmart, because Walmart will have the capability to run faster than the market. You're going to be looking for institutional participation, accounts for 85% of market volume, block trades, dark pools. I don't really pay that much attention. Here's an example of Meta. I just took this snapshot today. Take a look from the breakout here. This is our entry at 609. Look at a perfect entry. Look how much money we are making in Meta. Here is American Express. Look at the range bound action. All right, so traders that only focus on stock picks will always be part of the 90% of the traders that that lose money and fail. Don't just wait for for either the scanner to give you the trade or the service to get it. Put the work in. Try to put the work in. Try to identify the trades yourself, or at least if you have a service, it's fine. You just make sure that you understand the trade, because if you don't understand the trade, do not take the trade. And you have to dive a little bit deeper in order to succeed. And the biggest component is understanding the trade. And this generates confidence, right? And confidence is what you need, because it gives you the power to move forward. So learn how it's done. The skill is literally going to last you a lifetime. Do not rely 100% on a service. Just learn how to trade. Don't get lazy. Just learn. Every single week, there's so much material out there on the internet. Every single week, choose a topic and then, dive into that topic and look at the technical chart, make comparisons between what you have learned and the technical charts. It's a recession-proof skill. I'm proof. I'm here thriving. And definitely it's great when you're working from home. So if you want to turn 10 minutes of trading per day literally it's not even trading per day, it's actually watching per day into a 6 to 7 figure income account. Here's your checklist. You need to have education, fund an account, have a trading plan, do your homework, execute, never chase, okay? Because you don't know if you may buy it at the very high. Always look for those inflection points into the buy. Mind your risk, position size, trail into targets, take a little bit out. You know, it's better to have a little piece of the pie than no pie at all, because the price can turn around. Like, for example, now, right, in about 10 minutes, we're going to have the FOMC rate decision, and the presser is going to come at 2:30. Let the winners run and cut your losses. All the bad apples, throw them away. Start fresh and always be aware of the market conditions. So it is possible to create income, and it's possible to create wealth just with minimum time in front of the market. This is going to be my goal moving forward. More and more, I'm going to be focusing on swing trading rather than even day trading. So I'm still day trading an hour a day, but I really want to wind down, and I really want to focus more on swing trading, because this way you don't have to work as much. You do the fun things that you enjoy in life. So I'm here to share with you the Stock Swing Trader. This is a service that that TradeOutLoud has started with more than 15 years ago. And we have a plethora of really happy members. Outperform the market and improve your results. Best swing trading and investing strategies. Literally trade smart decisions, smart profits. You can follow us from our phone. You can follow us, we have various ways in which you can follow our trades. So I do have a special package for you guys. So we deliver the Stock Swing Trader email every single Monday. If the market conditions are crappy, to use a technical term, quote unquote, you're going to receive it on Sunday or even on Friday to get you prepped for Monday. But usually Monday, there's a little bit more calibration that I've noticed lately, and I like to send it on Monday night. But for example, last time we sent it on Sunday, right? So we sent it this week on Sunday because we saw some big divergence happen in the market, and I wanted to make my traders aware that something big is happening. And it was in the video. Comprehensive, and what you are getting in this newsletter, it's more than a newsletter. It's called a newsletter because you're getting it in your email, but you're getting comprehensive market analysis, macro to micro. You're getting the new market focus and the new themes. You're getting the sector performance. You're getting the market performance. You're getting the technical market overview and trades video. It's about 45 to 1 hour long. You're getting the earnings calendar, the economics calendar, and also the impact. So how is this economic calendar and how is this earning calendar going to impact our trading? And what is going to be the theme that we're going to be trading this week? You're also going to be getting a hot list. You're also going to be getting so many things. You're getting access to a live performance portfolio, real-time access. That's $997 value. You're getting the pre-launch access to my investing picks. That is $3,500 a year. You're getting your access to the private X feed. If you're new to trading, I highly recommend you're here because I give trailing ideas, constant updates throughout the day, but it's not mandatory to be there. Like I said, we have more than 200 to 300 members that are not on X, and they like to, trail their own trades. You're getting also a platform layout. You're also getting student personal support via email. Even if you have a question about a stock that, for example, I did not call, but you're in and you need help with, yes, shoot me an email. And if there's a technical email, I will personally answer your email. You get a risk sheet, so you're in control of your trades and you can position size, share size. And you also get money management cheat sheet. So it tells you exactly what it comes with every email at the bottom of the email. And it tells you what to do when the price action hits target 1, how many shares you need to take out, how much of a position you need to take out, what you need to do at target 2, what you need to do at target 3, and what you need to do further on. So isn't that cool, right? So total value of the package is over $16,000. This is not your regular, I'm going to send out an email with 2 stocks, 3 stocks, and sayonara. No accountability for it. No, we have a track record since 2010. For 15 years, we have collected the data, and it's on our website. So the Stock Swing Trader, if you're ready to jump in, is $2,500 a year membership. We're offering you guys $500 off. The price, the normal price of the stock swing trader is $3,000. So if you want to be a part of this program, you can actually use coupon code 500 off in order to get started. This offer expires tomorrow at midnight. There are only 10 spots available, first come, first serve. So this is actually what I have for you guys. Just want to show you very quickly, because I still have about 5 minutes left, what you're getting. This is how the newsletter looks like. So you kind of have an idea what you're signing up for. And you can see here, happy Sunday night, traders. We're talking about the market here. Here you have a link to the market outlook analysis and trade ideas. And it's actually this video right here. And you can see that we go through the S&P, we go through various charts, we go through deep analysis into the Qs, the SPYs, and everything. You get access to a real performance portfolio. These are the stocks that we're in. The 100% that you guys see here, it means that the trade is still open. It doesn't mean that we lost 100%. It means that the trades are still open. For example, on a trade like OKLO on January 6th, we capitalized on it and we trailed out all targets achieved. We made 45% on this trade alone. I don't know about you guys. Do you guys think I should still be day trading? I don't think so. 12% on this one. We lost 1% on this one. We lost 2% on this one. We made 1% on this one. Okay, so you guys can see that we are in massive, massive, massive profits here. And look at the stocks that we're in. We're very diversified. We also have a hot list here. Take a look at the hot list. Take a look at the themes that I have identified with cake, with the DRI right here, with the DRI, the restaurant themes, financial themes. Financial, we're still holding. We told our traders to still be bullish because financials are still holding. Here are the investing ideas for this year. So this is going to be a brand new service, but we're going to be offering this until the launch of our new program with our best investing ideas. And this is, again, generational wealth. This is going to be active investing as well. Continuing to hold these stocks right here, stocks like Nvidia and Broadcom still holding, Bloomberg favorites, and we're telling you guys because I do have the Bloomberg platform as well. You have a position size calculator that looks like this. And for example, let's say you want to input the dollar amount that you want to risk per trade. Let's say you want to start with $1,000 per trade. Let's say you have a stock that is $90. Let's say $85 is going to be your stop for the trade. It's going to show you exactly how many shares you need to buy, so you are not going to trade recklessly. The other thing that you're going to be getting is access to the stock swing trader, where you get constant, advice on what you need to do. So for example, yesterday I posted in Broadcom that if you have not stopped out, okay, add into this trade. CCL, bullish close, likely higher tomorrow. Boeing, and you can see like literally all of the updates right here. We're also, okay, here are some other ideas like Disney, Marvel Light, Amazon. You can see all the trades updates right here. You don't need to be in this group, but this is for you free to access in case you need extra guidance and you want a hand-holding system. And again, here you have, and David, thank you so much for posting it. So this is a wrap, guys. So if you have any questions, please feel free to, please feel free to email us at info. I'm going to leave my email right here, info@TradeOutLoud.com. And I see that one of the members is having issues with a coupon code. Shoot me an email at info@TradeOutLoud.com. Thanks so much.